Test. Hmm. Okay. I don't have the slightest idea what I'm doing. Oh, I'm supposed to be recording it. Oh, at least there's a simple feature for that. Nice. Only having one monitor is going to prove not helpful. Hmm. Oh well. Gonna wait a few minutes to see if anybody wants to join. If not, after that, we'll just get to getting. Ooh, two viewers. Nice. Just gonna wait a little bit, see if anybody else wants to jump on. Probably give them like 5 minutes or so, then get to getting. If you guys have any questions, it looks like you can type it in chat right here. Oh, dogs. Enjoying a delicious old fashioned right now. Bourbon itself doesn't really even need anything. It's just a delicious bourbon, but C'est la vie. 2 days until I take a month off of drinking, so might as well enjoy it. Notepad. What a great invention. Don't think you can format Notepad to be larger though, can you? Oh, they've made things changed. Boom. Analytics. 2 people. Average watch time 40 seconds. Little strategy. Let's go top off this old fashioned real quick, and then we'll start.
Sorry, Z. I'm sorry I didn't see you. I'm sorry.
All right, boring, but okay. So let us begin. Nice. Yeah, just no one ever comes anymore. Used to like do these and people would all be there watching and shit. Who cares though? All right, so I'm gonna go through like ES, NQ, probably some top holdings. It looks like Oscar's got some requests. Um, I'll just click back over here to this window and check and see if you guys say anything. Probably after every chart or two. Um, I've never used this streaming shit before, so here we go. Um, so looking at the ES on the daily chart, price tested down into the 50 at the lows last week on the 20th. Bounced and tested back up into the 61.8 of the range from all-time high into that low here at 44.5175. And then price rejected from there, and we're once again testing the third term 38.2 at 43.5075. The third term holds a higher bias than the fourth here. Basically, they're ranked by tenure, yellow being the third and green being the fourth. So while price holds above 43.5075, we use the resistance points above us at 43.91.5 and then 44.51.75. If we wanted to find the basically the stopping price, uh, the sorry, I had it echoing through. If we wanted to find the must hold price, we can just take the retracement from the previous low into the previous high. The 61.8 is there at 63 or 43.6175. Right there with the tertiary 38.2 as well. So I'm marking that area 43.50.75 to 43.61.75. Basically, as like a must hold zone. We do see higher lows here off of the previous low set at 42.93.75. And so long as we continue to set higher lows, then I would continue to watch for price to test back up into the resistances marked by those retracement zones. If we do end up breaking below this 38.2 at 43.50.75 and holding below it and making a new lower daily low, then I would look for a complete retest back down here into the 42.93.75. And then below that, we do see that volume kind of thins out a little bit below the 43.35. So price could move more fluidly through to test 42, 43 to 4300 again. And then the secondary test and support would be down here at the 61.8 of the tertiary range at 42.28, where that volume also sits. So that's a couple ideas. It would really take a move back up over this volume node at 44.5175 to really convince me to be long again in the S&P for now. I think that a lot of the risk sits over in the Nasdaq, and so we can check that out real quick. Let me get rid of some of these arrows, and I will get rid of this trend as well. All right, so now we have the Nasdaq. I've been talking about this for a little bit of time now. Uh, the volume build out now is being a little bit more defined within a larger range, but there for a while it was only from 14,950 up into about the 1500 zone. A lot of volume building out down here from 14,711 into 14,946 and developing a larger node down here. The question is, do we find acceptance back up into this larger area where we've marked previous consolidation zone, and then we lost it. We back tested it yesterday or today's regular trading hours, and we failed to find acceptance into that. More sellers than buyers up in that range, with a pretty forceful candle back down to end the day. If we do lose the current low at 14,711, the tertiary 38.2 is at 14,641.50. Though we do see the amount of volume above price now as compared to below it. So support one there at 14,641.50, and then support two down here at the 50 at 14,312, and then finally the tertiary and what I would think would be the final test would be the 61.8 at 13,982. We do note that there is a very large pocket of low volume from the current swing low all the way down into the 14,000 range. And so we would think that if we lose 14,6, 41.50, it would be pretty fluid down into that area. In terms of distances from the current low, we're talking about another 5% drop, about 728 points. And on the other side of things, if we do reclaim this volume node and we get above 15,092 and hold, uh, then we're talking about a retest up into 61.8 and then into all-time highs. So 1.3 and about 3.7. So I think that we use, at least I'm currently using this as a pivot, this zone here at 14,950 up into 1500, 15,100 or so. While we play below it, I'm watching for a breakdown and trying to find the, I don't want to say the worst setups, but the setups that look more inclined to move lower than higher. That includes stocks that are like trading within or right above volume nulls or gaps, bad volume structure, losing key horizontal levels, stuff like that. More so targeted in the NASDAQ than in any other area. So, one sec. Cool. You guys are all still hanging out. All right. So, to continue with that, so I'm looking for my downside plays to be weaknesses in the Nasdaq, and I'm looking for my upside plays to be consolidation breaks near all-time highs, because generally when a market falls, the stocks that are green will attract the most attention. And so if we are buying consolidation breakouts that we know have support basis near all-time highs, then we would expect for those stocks to continue to move higher while the market may be moving lower. And so that's why we look for counter trend price moves during times when the market is volatile, because if a stock can hold green during uh, an episode like the last couple of days, then clearly it can hold green when the market also is green. So let's touch on a couple of the downside stocks that I've been looking at lately. First, we'll go into Apple here. Let me just get some of these arrows out of here. I did not prepare, so. All right, so first we have Apple. We have the retracement drawn from the all-time high down here into the low. That's these green levels. Let me zoom in for you real quick. There we go. It's a little bit better. All right, so we have Apple here. Let me take the orange off. Okay, there we go. So yellow runs it into all-time high, and those are the supports from the swing low into all-time high. We see we lost the 23.6, and we're testing into the 38.2 at 141.58. It's been current support. It's held 1, 2, 3, 4 times now. And then we have a retracement in green from all-time high down here into the swing low. And these are our shorter term retracements, 23.6 here at 145.64, also the price of previous all-time high. And then the 38.2 of that range up there around 147.50 as well. So we see that we caught a bounce up into the 38.2 of that range, and price has since made a double bottom low. And when trying to test above resistance 1 to make it back to that high, price failed, and we are now contained within the 140.150 to 145 zone. And while volume builds out here, we do have volume above price. So the longer we stay below 145, the more inclined we are to break down below the current support at 141.58 and test through this very poor structure extension here from 136.7 up into 141.58. Generally, when we see a breakdown underneath the support, because there is almost no volume below here, it usually washes out pretty quick. So 141.58 down into 136.73 gives us a breakdown of about 3.4% or about $5 from the current low. So if we do continue to see weakness, or should I say, if there is weakness in the market, it may be because Apple breaks down below 140, 158 here, and there's a pretty decent size null there for price to extend back down into. I wouldn't want to play it any further than the 137 area or so. There is volume below price after that. So that's one of the trades that does have kind of a weak structure to it within the NASDAQ. The other one I've been watching for weakness is Google here. Let me get rid of some of these horizontal rays. All right. So this is Google on a daily chart. Pink runs it into all-time high. So the closest primary support right now is 2473, about a drop of 8% or so from the current low. We see a volume build out here in range from about 2700 into 2760, and it had been holding price, but we're getting very close to breaking down below the support that was held here. We did break down below today and closed just above it, about $2 above price. So if we do end up losing that 2687 or so area, there again on Google is a very large pocket of room where there is no volume node below it that is larger than the one above it. We do note that, oops, we do note on Google here that there is a volume node down here at 2435 or so. So if we do break, we could say that the this area would try to lend support 2540 down into about 2530 or so. But overall, we would look for a retest down here into this larger pocket at 2440, which is right there also with the primary 23.6 at about 2473. So those are certainly the two weakest stocks right now in the NASDAQ. Microsoft holding the second largest weight. I couldn't brag about it because it's the most structurally sound stock. We do just see these random pockets of volume extending really from 260 all the way into the current price point. So we will want to see Microsoft hold this 284 or so area. If it does lose 284, it does have option down to the 279.95 at the secondary 38 too. And then finally channel low down here at about 274. For me to want to play Microsoft to the long side again, just adjust this real quick. For me to want to play Microsoft back long again, I would either need to see a test down here into like a channel low and the 38.2 at 280 to play the bounce higher. But right now, this really isn't a great setup for Microsoft. Really something I've been trying to stay away from, but as it is the second top holding in the market, it's kind of hard to avoid at times. So, oh, sorry, James, my bad. I'm recording it too, man. So I hate to ting, bing, bling, whatever, everybody in the chat room at everyone because like it's 7:30. So I don't know. People who have it on mobile phones and stuff may, I don't know. My bad. All right. So we've covered Apple and Google as weak links. Microsoft is a little bit scary. Obviously, if we're discussing how far it would take for price to move from the current node that it's in to a node that's equal in size, then it would be somewhere around 9.7%. So, um, and that's something that could happen just based on the structure. I mean, if the market goes weak. But we can check out Amazon as well. I know it sounded overly bearish, and I didn't mean for it to sound that way, but it really just is how the top holdings are set up right now. It's really, you watched everything else roll over for the last few weeks, and everybody talked about how it was a market crash, and now some of the top weights look like they could lose a little bit too. So interesting to note that. Interesting to see if those stocks that were the ones rolling over the last few weeks to months will now be enough weight to support the market as these top weights may or may not lose, some pretty good chunks that are left, anywhere from, 4 to 9% on some of them. So we'll have to wait and see. Amazon looks. I wouldn't short Amazon. That's for sure. This is a weekly build out in Amazon. It's holding above this pocket of retracements, the secondary 23.6 and the third term 61.8 there around 3200 area, 3220. While price does remain above those, I would look for continued compression between 3200 and 3550 while volume builds out, and then I would hope for a test higher into 3773 at the all-time high. But right now, this is more of like a containment play, I would think. So I would say that I wouldn't think there's a big risk in Amazon. I guess maybe like a 3% drop. So I guess that's a kind of a decent risk. Potential for a 3% drop in Amazon too. It would take me price getting over this 34.32 to 35.50 range to really want to play Amazon long again. Just a lot of volume in this area, and that tends to be congestive in nature. People are, trying to push and pull to get better pricings and such. So, yeah. So let's talk about a stock that is making new highs while the market does this, and that's Oracle. Um, that's been a very interesting watch. Let me just get it back down into a daily chart. Right, so here we have Oracle. The stock had been consolidating sideways since July. It took a gap down on earnings there, even though it beat. We see a very large surge in price there on the day of 17 September, and since it hasn't looked back, price regained that channel and has since tested and made new highs in the name. While price does remain above the point of control and range around 90, as well as the tertiary 38.2 at 89.39, I would continue to want to watch the stock on the long side. The maximum bull hold on this would be here at this 90.50 range at the tertiary 23.6 and the previous highs. Uh, any hold above these previous supply wicks that range all the way up here into about 90, 85 or so is very, very bullish so long as we don't pull back in and under those. I would look for this to test up and out of the current high. And we have targets at the 96.13 area and then 103. So, again, one of those stocks that plus 84 on a day like today. So, nice name. If we want to go ahead and check through the sectors real quick. Again, we've got the communication sector, which is held and led by Google as the top weight. We see it broke channel. It's been broken channel for about a couple weeks now. Apparently, my laptop didn't update all my charts, so that's pretty solid. Um, but you see price just really in a congestive nature here. We can draw another retracement from the previous low here at the test, and we see 79 as support. So really no play in the XLC. The XLF has been interesting. High and tight here against the all-time highs. We saw some really interesting looks after the FOMC meeting, including JPM, that went from a head and shoulder setup into new all-time highs very quickly, very quickly. So will be interesting to see if this pattern does or is able to break out. If we come into a daily, we can put a retracement on from the all-time high into that swing low. Just make it green. Let's go ahead and zoom in. And so we see that even though there's this huge extension on the XLF, it has regained the 61.8 of range at 37.89, as well as this volume node. And so while price does hold above 37.87, financial sector gets the nod to the long side to retest the all-time highs. Though I think it would be pertinent to go through on a chart by chart basis and break down which of those looks overextended and has support on each of its own individual sectors or stocks. Um, JPM, for example, made new all-time highs, but and is developing a volume node up here, but there is this gap down into 163.59 that probably needs repaired before we see any advancement. GS, we see GS didn't fare nearly as well, with price running into the 23.6 of that previous range and then failing. And you'll see that across a lot of sectors right now. You'll have some stocks that are doing very, very well, and some stocks that are doing very, very poorly within the same sectors. Um, and it's a very interesting concept to be watching. Usually you see sector-wide moves, and right now you're not seeing them. Um, this is BRKB, which is the top holding within the XLF. Um, and again, I mean, you see its bias to the FOMC meeting versus JPM's, bias. So it's a very interesting dynamic that we're seeing across a lot of these things, and I'm not really 100% sure why it's occurring, um, but it is occurring, and it's been occurring for quite some time. Um, it's been very interesting to note and watch, and it's certainly making trading a little bit harder too, because you get the ebbs and flows of both the advancing and the declining stocks into each other through certain pauses. So uh, anyway, again, you have here's a stock like in the XLI cat that's trading down um, well off of the highs. I mean, yeah, so 24% off the highs. Um, but then you run into stocks like Home Depot or Lowe's, both very consolidative at all-time highs in nature. Uh, Home Depot, one of the um, better looks here, as well as Lowe's. We can go into Lowe's as well, but we have this consolidation just near all-time highs as price has been dropping in the markets. You have a cup and handle setup here on Home Depot, ranging from 10 May cup to 12 August, and then that handle out here into September. So long as we continue to see volume trade above this 328 area, I think that it has a good chance of breaking above this all-time high. Uh, let's see. We do have a target at 352 above all-time high, and then we have that longer term target up here at 375 or so at the 161.8, as well as that secondary 261.8 there as well. So been watching for some support to develop above this 334.50 area. We don't want to see these dips below there anymore. As soon as that starts to hold flat, I think it's a good trade for up and out into 345. I've got some 345, 350 bull calls that I rolled out to 15 October today, and I think that's probably a decent way to play it. With this volume not really being at all-time highs, it really gives like a 7 point wiggle here. From volume to all-time high. So I'm not trying to be overly aggressive with it. If I can tag this 161.8 of this previous shorter term cycle, then I'd be happy with that. And then see how price does on the retest at 345. Let me delete some of these. Lows is the same way for the most part. Low is holding above the 38 or the tertiary 61.8 at 202.50. Multiple tests below it, and we see demand within the wicks, and then demand higher here into the 205 range. Again, the volume isn't built at the highs, it's built near the highs, And so for that reason, it kind of gives a little leeway here from 210 up into 215. Um, so we're not expecting an immediate break out of the all-time high, but we are expecting tests into the all-time high, and then we would expect to see at some point the 210 to 211 area hold, and then price to test from 211 up into 214. Then we'd see the break up and out. Much like Home Depot, the 161.8 is quite a distance away. Here on this one, it is at 235 at the 161.8, and we see some shorter term targets at 217.5, 222, and then 226, and then up here into 235. So again, really nice consolidation. So long as lows continues to hold 2025 uh, on a just a common stock basis, it has a really good look. Otherwise, it probably needs to put in some sort of condor to collect decay, and then maybe a bull call like with further dated for the 236 mark. But again, another stock that has a really nice look here near all-time highs. Um, oh, sorry, pop my back, get a drink. All right, so we left off on XLF, and then I went on a tangent about stocks trading in different directions. So XLI, even though we've kind of meandered through it, um, not really a great look here for XLI as a sector. We had this huge development of. Let me turn it on daily real quick. We have this huge development of volume up here, massive, massive consolidations, and then as soon as we set this low, we can't even break back into that node, and really is problematic because of the same reason that we see on stocks like Google and Apple. There's not really a lot of volume below price. If we pull this stock out into all the way out into 2020, we notice that there's an avalanche of volume above and really not much to catch all the way down here into 90. $9 drop. It's almost a 10% drop on the stock. If we continue to hold below the 100 to 101 range, certainly a possibility. First support would be down here into the secondary 23.6 at 92.86, but really no volume there to speak of. So certainly a little bit of a washout that is potential in the um, XLI here. And again, to get above price, or to really want to play this long, we need to see price back above this node, 103.36 to 103.40. Um, really no reason to try to play through this mess of volume. XLK is the next. And we see a similar instance here. Just go ahead and delete the 161.8. We see a similar instance here with the XLK as well. And again, these are just sectors. I mean, they're a culmination of a lot of things, but it gives us a good basis of where we want to start looking for bullish and bearish bias. And again, you see XLK has this huge volume build up here, 150.83 or so as a volume shelf. And now we're seeing price move below that on a daily close. So if price can't recover the 151 area on XLK, then we can look for lower retracements. So retracement, the secondary 38.2 at 149, and then 61.8 down into 142. Really no volume within that range, almost like the Google and Apple stocks. So makes sense. Apple's in there, Google's not. Google's in the XLC, so I guess Apple and Microsoft. Um, Consumer staples is kind of blah, trading within range. Um, Healthcare has already fallen down into the 61 native range. Volume support really doesn't pick up down here until 125 from 128.88. So a ways that that can go. Again, just really a sloppy structure uh, on the volume profile again here on XLV. And then XLY, nice consolidation here near the all-time highs. So long as price holds on XLY at 182, then we would look for price to move into all-time. Oh, there's just a lot of retracements up here. Um, just delete some of these real quick. Sometimes I wonder why TradingView doesn't carry things. Okay. So anyway, so long as 182 holds, XLY looks good as well. Um, let's see. We've got, let's go through, Oscar wants some PLTR. All right. Um, boy, this was one I was into until I think Monday. Anyway, PLTR, we see, this is a previous trade. There we go. So we see price consol or the price volume price is trading into a really large node right here. It ranges from the lifetime 61.8 at 2290 up here into the 50 at 2695, as well as the which would now be the secondary 38.2 at 2770. And so long as price continues to trade in this range, it really is just a neutral bias at the time. We do see rejection as price tries to break out of the 38.2 at 27.73 and is pulled back in. The question is, I mean, do we attribute it to market weakness or just to the stock itself? If we go into a daily chart, you see much of the same. It comes up in double tops here around 29 to 30 area and then falls back into range. Currently breaking below the uptrend that was set back here in July, but not much of a trade left here while it's in volume. Really just don't like to play uh, the whip back and forth of it. Could probably see containment between 23 and 28 in the form of like sell to open iron condors. I'm not really sure what the IV of the stock is, so I'm not sure if that's cost effective or not, but it is a thought, sir. You wanted Wish as well. A lot of these, a lot of these WSB names, and everybody wants to play them, and then they just fall apart. Um, I'm no exception. I think I played Wish somewhere up here in the tens. But anyway, not a good look for Wish. It just continues to fall. I mean, unless you're short. If you're short and uh, then you're probably really happy about Wish. If we use a retracement from the previous cycle, then we're looking at a move all the way down here into 279 from 556. So uh, that would be where I would look for support. It looks like the point of control is above price, which is never good. So, I mean, even resistance here at the 7 range, and then, like I said, support down. I mean, guesstimation of target would be somewhere near the 280 range. Not looking so great. XL, what do you need to talk about these things you're trading, Oscar? Again, just not really a good look here on XL. Um, go ahead and put a retracement on. Go into a daily. Yeah, so again, you have a stock that is trading below the point of control on the daily at 685. It's also trading below the 61.8 at 703. Both some pretty big issues. We see price test up and into those and then reject over the course of the last couple of days. So we look for, move down into 541 and then um, down here into 280. Maybe make a race of it between Wish and XL to which one can get to the twos first. Um, I put my money on I put my money on XL. I'd say XL gets to 280 before Wish gets to 280. Um, let's see. Yeah. So I guess the question ends up becoming, do we see price move below these current lows? I wanted to show you guys the spot gamma chart. Oh, it's gonna load. Sweet. I want to show you the gamma chart and kind of just how it's sitting, how the Nasdaq's just kind of like sitting on a cliff, kind of. Um, don't tell Spot Gamma I showed you guys. It's a really great. It is a really great website though. Really cool shit. It shows you. So we're in the queues now, but it has this for everything. This is the gamma levels, current expiration and next expirations. Really cool stuff. But what I want to show you is this. This is the gamma profile. Basically, look for really big bars, and really big bars are going to be supportive, and really small bars are not really supportive. And so we have it on the NASDAQ, and we see that here at 630.13, basically the price that we were trading near to at the close, has this very large negative gamma bar, and it was very supportive today. We note that above price, there are no larger gammas into 370. We do see some bars here at like 362 and 365. But I'd also like to note what we see below price and below 360. The next largest bar is all the way down at 350, representing about 410 points in the Nasdaq and $10 in the QQQ on a full, with supports at 358 and about 355. So that's an interesting look. And then we can go out real quick and look at the S&P if you wish to buy Spot Gamma. And then we look at S&P again. We see quite a bit of volume expiring, or quite a bit of gamma expiring and expiration. Um, the black bars, and so the gray ones will continue to stay. Um, so yeah, a lot of volume or gamma expiring, and then we can do the same thing down here into like the. Oops, this is the SPX profile. And so we note that there's positive gamma at 4350, and then, you know, really nothing. Um, Literally, just nothing. We have a 4320 at about half the size, and then 4272. Um, and then above price, we have resistances at 4420 as the first one, and then about 4464 is the second. And then same general idea on the gamma profile as well. Big support here at the 432 range, and then really just a big washout below price there, and above price about 440. So interesting dynamic. Just to really highlight that not only does the chart say that we're on a cliff, but that other uh, supportive data also says the same. So Tesla. No, I can do Tesla, Rick. Solid idea. I'm open for any options at this point. Let me delete some of these shorter term things. And sorry about all the alerts that you see on the screen. Apparently, they don't just go away when you try to make them go away. Anyway, so we have Tesla here. Let's zoom in. Tesla just really been a really good look through this entire drop. It's one that I've got a position, I think 15 October. I believe I sold an iron condor for 830, 860. So really looking for Tesla to get up into this box by hopefully by or on the 15th of October. Anyway, um, we note that Tesla broke above the tertiary 61.8, 762 and a half or so, about 3 or 4 days ago. And since then, price has tested back into it and held. And since testing it 2 days ago, actually set a higher low, and now a compression over the course of the last 3 days. While price holds above this 762.5, the nod definitely goes to the bulls. There is volume below price at 754, 755. More so volume down there than even up here at the 850 mark. So we look for a hold at 760 to 762 to push up into 815. And then if we do see a move over the 815 area at the 76 floor, the target then would be the volume node up here at 830 to 860 or so. And then finally up here at all-time high. Really nothing bearish about the Tesla chart from the current standpoint. Um, we could even like go into like an hourly chart. And I mean, we see that the volume build here is now at 781. If we want to do like a retracement on this range, I mean, short term, obviously. I mean, 3 day retracements, but currently holding supportive at 778. So like we'd want to see 786 break, and then play it into along into 800 and then 815. There's probably some sort of downtrend here too. Yeah, there's probably yeah. So would look for, I mean, just on a short-term time scale, 778 to hold, play up into 786, and then from 786 can play out into 800 and then 815, and then again up here, oops, up here into the 830 to 860 range. Yeehaw. Yeah, they're supportive. They're just not to the size. Sorry, I just saw your message there, Sai. Um, they're supportive. They're just not supportive to the size of the gamma above that. Um, so that's all I meant. Oh, whew. There's boy, big tree fall hard, Adobe. Um, and this is what happens when you get, I mean, like poor structure built out. I feel like that could be written in like capital lowercase letters. But anyway, this is what happens when you have like really poor volume. I mean, price runs up, a little consolidation here and there, and then the market rolls over and it collapses. Adobe not doing real great here at all. And honestly, Adobe might not do a lot greater, a lot harder. It has the option down here into 547 or so, still no volume, maybe all the way down here into 520, maybe even into 500. Honestly, just not a good look for Adobe, and it's kind of rough because it's up in one of the top holdings, I think, right? Um, yeah, I mean Adobe is the 20th holding in the market at 0.76 weight. So, um, yeah, not a good look there. And this is a fun sheet to look at too right now. We have that's ugly. Yeah, it is. So we have the top holdings, and this was broken down by. Let me zoom in here. It's broken down by a 6 month point of control and then the 1 year point of control. And this is the percentages away from it, and then the weight they carry. And so you're seeing a lot of these stocks coming into supports. The average is just 4.5% away from the point of control, which is pretty bullish. The weird thing is that you're starting to see a lot of them come into like being underneath even the 1 year point of controls. And in itself, like less than a percent, no big deal, right? But some of these are even like extending away from like larger value. If we look at MA, for example, not nearly as bad as an example as I thought it was going to be. Oh, yeah, okay. So, I mean, we do see point of control is above price and it is pushing lower. Not really that horrible of an example. Thought it was going to be a lot worse at 3%. Um, but okay, so let's check a couple more top holdings. Disney, for example, another stock that has been very consolidative in nature. We can go into a weekly chart of Disney. Just get rid of this. And we see that prices again trading down below or into the lower part of this volume node, pushing down below the secondary 23.6 at 174. But so far, every push below this level has been met by buying uh, by the end of the week or the next week. So really no short in Disney below while it's still above 167. But again, then um, you find another null um, in Disney. 7% right there, 12 points or so, even in Disney, where price could roll lower. So it's something to watch. And then again, if you want to watch it break up and out, you see uh, supply, supply, supply all the way up into this. So really, you can't even play it until up over 189. So, and then, that sets up about a 7% move too. But again, another stock that is in a consolidative period that you really just don't want to touch. Um, you can play the whipsaw, you can play the move back up over 173.5 for 180. But the more time and more price that develops below 181 is going to be more bearish. So, um, it'll be an interesting concept to watch Disney build out there. Let's see, a couple more here. We were just in Disney. JPM. Another program I like to use here is called Ramp. I don't know if anybody's ever seen it. I don't know if I've ever talked about it, but it's a really nice little piece of software for the cost. Really nice little scanner. Has a lot of options here. Bollinger Band, Calendar Squeeze. I particularly like to use it for the price consolidation break and the trend line. You can set the number of bars that you're looking for a consolidative action, and then the maximum percent that you wish for that range to be. And this is a really nice tool if you're trying to find consolidative breakouts, um, especially in a market like this that's moving lower. Just not a lot of decent setups right now. See a couple of things that I've been looking at. ZM, I took a small position. Well, I took a full position in ZM. The 61.8 is here on the lifetime at 262.22. I'm gonna probably look to build out a position while it's down here for a longer term. I had November's today and I sold them on the break at 262. But if we move down into the lower part of this box, I'm probably going to try to pick them up again and see if we make that move up and out. A pretty large drop from the all-time highs up here at 588 all the way down here into 262. So we'll look for that type of play to come by as well. Uh, that broke down. Oh, you have BA today trading into the trend line down. We see resistance there and a push back below the secondary 38.2 at 225.38. Just a really hard stock to play right now. It is still within consolidation down here into the 225, 232 range, and really can be consolidative all the way up into the 270 or 267. If there is build out up here into 267, it can be played out into 309. It can be played out into this 309 range through this extension. But for now, really just messy down there. Um, ERJ had a decent look, uh, but I do believe they also are into volume. Yeah. So yeah, so not a lot of stock setups. I wouldn't be shocked to. Oh no, we don't want to do that. Van life. We have a nice look here on V. Let's just get rid of that. Again, you know, Visa consolidative from 224 up into 235. Just a lot of these patterns that are they just don't look great. There's not a lot set up to play directionally. I don't think at this point. Um, PayPal's breaking down again. It's into the 61.8, but there you go. Yeah, I mean, PayPal's into the 61.8. Just not a lot of good looking setups right now. Trains, yeah, I know, right? When I have my windows closed, it's hard to notice them, but when I have them open, it's not so great. SQ, yeah, sure. Yeah, if anybody's got any they want me to look at, let me know. Otherwise, I'll probably draw it to an end. Um, really just wanted to highlight that issue that could be a potential problem within the NQ again. It's interesting. Just my laptop just doesn't like to take what I do on my computer at all. There we go. Okay. Oops. Oh, looky there. So we have SQ here on a weekly chart. We see prices dropping back into the secondary 23.6 at 22.8060. If we wanted, we could put a retracement on from the previous low up here into this high. And we also can note that the 61.8 of that range is also overlaid at 229.32. We can go into a daily chart right quick. Oops. We can go into a daily. Um, and again, we see this very large node building in range. Um, a very bullish aspect from a longer term perspective. We would look for price to bounce in this area from 229 probably up here into 232 233 or so. Best price to get it at 229 230. You have the point of control here at 227.69, and we would look for price to move higher up here and potentially back test into 244 and then 252. Could run a retracement from the all-time high down here into wherever this low goes. This is the secondary. It's hard to set the final retracement until you see a potential low being made. Right now, if we did that, just make it yellow, we see that we're looking at like 255 and then 268. However, if we do see a move down here into this area, then you're looking at more 252, 266. So certainly a little bit different in price points depending on where the slow comes in. But it's certainly a worthwhile effort near this 230 range. With volume here, and we do see it being consolidative on the left side, may consider some sort of containment play from 230 up into this 252, maybe like in the form of selling an iron condor. You also have a downtrend established here from the high down here into this price point. and so further sign of a downtrending resistance, and maybe further reason to try and make this a containment play between 230 and 252 over a prolonged period of time, as opposed to trying to play it directionally up and out. Righteous. So I think that maybe that's where I will leave you. I can't think of anything that really has me excited as far as the setup is concerned. We have those stocks that are trading near all-time highs that look really well. We can do a quick flip through these real quick and see. Really a fun little tool. If you don't have it, get it. I think it's like 40 bucks. Great stuff. Free data. Trendline scanner. Bullish breakout through horizontal resistance. Wouldn't think you'd find much of these, but they find them. Anyway, so yeah, the risk I think is still contained within the Nasdaq. We do see price still bouncing, so um, I guess we'll see what tomorrow brings. We do have multiple expiries this week. We had one expiry today. We've got an expiry tomorrow, and we have an expiry on Friday. So we'll be watching all of those things. They could induce, you know, some pretty interesting gamma moves. So again, something to look out for. Well, if price moves below 14,641.50 on the Nasdaq, then option to move into 14,312 and 13,982. We have that JPM collar also on the SPX, and it has yet to be rolled out, and it's on the quarterly, so it should get rolled out tomorrow. So it'll be interesting to see where they place that. It's a protective hedge trade that JPM puts on in one of their funds. So it'll be interesting to see how that plays out. Again, on the ES, we look for support at 43.50.62. Risk reward is long into 43.91.50. And then the downtrend and the 44.30 to 44.50 pocket. On the downside, if we do lose that 43.50, 42.93, and then down into 42.28 as S2. Hope everybody enjoyed the show. And hopefully, I'll be doing this more often, even though I'm going with Sober October. So maybe it'll just be charts and stuff that's organized and not just me rambling. So, hope everybody had a good time and hope you enjoyed the show. I'll see you guys tomorrow for another day.